In a world built on ambition and greed, this is a story of a power so vast, it remains almost invisible. It dictates the fate of nations, shapes the lives of billions, and holds the entire modern world in its grip. This is not the story of empires or armies, but of something far more fundamental: debt. From the dawn of civilization to the digital age, this narrative uncovers a hidden chapter in financial history, a story of power, manipulation, and lessons the world refused to learn. Every moment builds towards revelation: how decisions made in pursuit of profit reshaped economies, altered lives, and defined the meaning of value itself. As the truth unfolds, one question remains: did we master this force, or did it master us? There exists a hidden architecture beneath the surface of our reality. It is an invisible engine, a silent current that directs the flow of capital, steers the policies of governments, and governs the trajectory of individual lives. This force is debt. We are taught to see it as a simple transaction, a loan, a mortgage, a credit card balance. But its true nature is far more profound. Debt is the ghost in the machine of modern civilization, a system of obligations that binds the present to the future and the poor to the rich. It is the secret logic that underpins our global economy, a force so pervasive that we no longer question its dominion. To understand our world, we must first understand the story of how this invisible empire was built. Its origins are as old as civilization itself. In the Fertile Crescent of ancient Mesopotamia, the first recorded debts were not etched in gold, but in clay. Farmers borrowed grain against future harvests, creating a simple yet revolutionary social contract. But this personal form of borrowing soon evolved. Kings and pharaohs leveraged debt to fund their armies and build their monuments, pledging future tax revenues as collateral. For centuries, debt remained a tool of the powerful personal arrangement between monarchs, merchants, and the nascent banking families of Renaissance Europe. It was tangible, limited, and bound by relationships of trust or coercion. This was debt on a human scale, a world away from the abstract, globalized system we know today. The 20th century, however, would shatter this old world. The cataclysm of two world wars transformed the nature of debt forever. Nations, desperate to fund their industrial war machines, borrowed on a scale previously unimaginable, issuing bonds that mortgaged their entire economic futures. The cost of victory and of defeat was a mountain of sovereign debt that reordered the global balance of power. From the ashes of World War II, a new framework emerged at Bretton Woods. The U.S. dollar, pegged to gold, became the world's reserve currency, creating a stable, predictable system for international trade. For a time, it held. But the discipline imposed by gold was a cage, and the world's ambitions were growing too fast. The true moment of rupture came in 1971. With the costs of the Vietnam War and domestic spending soaring, President Richard Nixon made a fateful decision. He severed the U.S. dollar's final link to gold, ending its convertibility. This single act, known as the Nixon shock, was the starting gun for an unprecedented era of global credit expansion. Without the anchor of a physical asset, money became purely abstract, a fiat creation of governments and central banks. The age of fiscal restraint was over. The age of limitless borrowing had begun. A new, more volatile chapter in the history of money was being written, and its consequences would ripple across the globe for decades to come. In the decades that followed, a perfect storm of deregulation, globalization, and technological innovation ignited an explosion of credit. Financial markets, once confined by national borders and strict rules, were set free. Complex derivatives were invented, allowing debt to be sliced, diced, and sold as a sophisticated product. Mortgages, car loans, and student debt were no longer just liabilities held by a local bank. They were packaged into complex securities and traded in a vast, interconnected global casino. Debt was no longer merely a tool for building or buying. It had become a commodity in its own right, a product to be manufactured and sold for profit, with little regard for the underlying risk. The system was generating wealth at a breathtaking pace, but it was also building the architecture of its own collapse. This explosive growth led directly to the precipice of 2008. The global financial crisis was not an accident. It was the inevitable consequence of a system that had incentivized reckless borrowing and lending. Subprime mortgages loans made to the least creditworthy borrowers were the spark, but the fuel was the trillions of dollars in complex, opaque debt instruments that had infected every corner of the financial world. When the housing bubble burst, the contagion spread with terrifying speed. The very institutions that had profited from the boom were now facing annihilation. The crisis revealed a terrifying truth. The global economy was not just using debt. It was addicted to it. And the withdrawal was proving to be catastrophic. Today, that addiction has reached its zenith. Every pillar of the modern economy now stands on a foundation of borrowed money. Governments borrow to fund social programs and military spending, running deficits that would have been unthinkable a generation ago. Corporations borrow to finance buybacks and dividends, artificially inflating their stock prices. Households borrow to pay for education, housing, and basic consumption. The entire system has become a delicate house of cards sustained by a continuous flow of new credit. If that flow were to stop, or even slow, the structure would not just wobble, it would collapse. We have built a world that cannot function without ever-increasing levels of debt. This brings us to the precarious present. The global debt pile now stands at over $300 trillion, a figure so vast it defies comprehension. It is a mathematical certainty that this sum can never be repaid in its entirety. For years, central banks suppressed this reality with near-zero interest rates, making the cost of servicing this colossal debt manageable. But now, the endgame has begun. A surge in inflation has forced interest rates higher, dramatically increasing the burden of repayment for governments, companies, and individuals alike. The cracks in the system are beginning to show. Defaults are rising, and the specter of a systemic crisis looms larger than it has since 2008. The world is holding its breath, waiting to see which domino will be the first to fall. The path forward is shrouded in uncertainty, but several possibilities emerge, each with profound consequences. The first is a sustained period of high inflation, where the value of money is deliberately eroded to reduce. The real value of the debt a silent default that punishes savers and creditors. Another path is austerity, a brutal regime of deep spending cuts and tax hikes that would likely trigger social unrest and economic depression. A third, more dramatic possibility is outright default, where nations or major corporations simply declare they cannot pay, triggering a cascade of losses through the interconnected financial system. Then there are the more subtle, insidious options. Financial repression, where governments collude with central banks to hold interest rates below inflation, trapping savers in a system that guarantees they lose money over time. Or the most radical outcome of all, a systemic reset. This could involve a global monetary conference, a new Bretton Woods to devalue debts, and establish a new financial order, perhaps one based on digital currencies or a basket of commodities. Each of these futures represents a different way of resolving an impossible equation, and each would fundamentally reshape the world as we know it. Beyond the abstract numbers and geopolitical scenarios, this story has a deeply human cost. The system of global debt translates into tangible hardship for billions. It is the student graduating with a six-figure loan that will shadow their entire working life. It is the family trapped in a mortgage for a home whose value has plummeted. It is the patient forgoing critical medical care for fear of incurring bills they can never hope to repay. On a national level, it is the developing country forced by the IMF to slash education and healthcare budgets to service loans held by foreign banks. Debt is not an economic abstraction. It is a force that constrains human potential and perpetuates inequality across generations. This leads us to a moral and existential question about the civilization we have constructed. For half a century, we have built a global system that actively rewards debt and punishes saving. It encouraged short-term consumption over long-term investment, speculation over production. This model thrived in an era of rapid growth, expanding populations, and cheap energy. But can such a system survive in a world of slowing growth, demographic decline, and finite resources? We have mortgaged our future to pay for our present, operating on the assumption that tomorrow will always be bigger and richer than today. What happens when that assumption proves to be false? The final, unsettling message is this: debt is more than just economics. It is a story of power, of control, and ultimately of destiny. Every great empire in history, from Rome to Britain, eventually collapsed under the weight of its own financial obligations and military overreach. Their decline was a slow, grinding process, marked by currency debasement, rising taxes, and a loss of faith in the institutions that govern them. We are now witnessing similar patterns on a global scale. The next collapse may not be that of a single nation, but of the interconnected system itself. The reset that follows will not just alter our economies. It could reshape the very foundations of modern civilization. The global debt system, how debt became the driving force of the modern world, its historical roots, expansion, and the possible collapse or reset ahead. From the corridors of Wall Street to the boardrooms where nations are shaped, this narrative explores the rise, the fall, and the silent consequences that changed how money moves. As the truth unfolds, one question remains: did we master money, or did money master us?